What's going on, guys, and welcome back to another video. So with a new week upon us, today we're going to be looking at what 5 stocks slash ETFs I'm buying this week on my Trading212 portfolio. And with all that being said, let's dive right on into today's video. So here we are on my portfolio, which has 33 holdings overall. We can see here on the left I have €8,235 of my own capital invested, and we're up €1,300 or 15.82%, which gives us an overall account value at the moment of €9,500. Now we can see here as well we have €125 in free funds, so that's what I'm going to be investing today. But just before we get into that, I just want to have a very brief look at the dividends I got paid on the 11th. Now there's 5 dividend payments, and although all these amounts are very small in comparison to the overall account value, this is definitely the biggest amount I've got paid in dividends in one go. We can see here we got €1.18 from Chevron, $1.50 from IBM, 56 cents from Microsoft, $1.64 from ExxonMobil, and $2.11 from Johnson & Johnson. Now that equates to probably just about €5 or €6, which isn't a whole lot, but again, this is a lot more than what I was getting, let's say, this time 3 or 4 months ago. So it's crazy to see how compounding interest and dividend payments can really start to build up over time. So in terms of portfolio performance, this is probably one of the better times at the moment. We're up about €1,300, as I said, which is kind of one of the first times we've hit that mark. So hopefully we can start pushing on towards getting 20% in the green. Now, as if you're not aware, we have 33 holdings overall on this portfolio, which is a mixture of dividend and growth stocks across all different sectors. So I like to be diversified, and they're mainly blue chip stocks as well. So I usually kind of dollar cost average in. Now I've been doing that for the last few months, but now at this stage about 30 or 31 of the 33 are all in the green, with the 1 or 2 always being in the red. So in order to dollar cost average and to be able to equally weight out my capital I want to invest, I've after changing my strategy slightly. Instead of looking at my overall performance in the stock, now we're looking at the 3-month charts. And by looking at the 3-month charts, it firstly gives me a lot more companies to potentially invest in because there's a lot more in the red. For example, on the 3-month charts, if we look through my portfolio, which we will do in a second, 7 of the 33 are in the red, which as a long-term investor, as strange as that sounds, is actually very enjoyable to see because it just means you get in at discounted prices. And second of all, it means, for example, we'll see our first company here will be Chevron, and it's up about 45% in the green at the moment. Now I have other stocks that are up nearly 90 to 100%, so it's going to be a very, very long time for that overall stock to go back into the red, bar a full-on market crash. So that's kind of the reason I want to look at the 3-month charts going forward, because otherwise I'll just be left with 1 or 2 shares in the best performing companies instead of slowly drip feeding funds in like I'm doing with the ones in the red overall. Okay, so as I said, there was 7 overall in the red. Now we're only going to invest in 5, and the 2 we're not investing in this week are the High Tide and the iShares Global Clean Energy ETF. Now the ETF is down 8.76% overall, and High Tide is down 9.43%. Now the reason why I'm not investing in these 2 stocks this week is firstly because I've definitely been investing a lot more of my capital into these over the last few weeks, which is great to see as well, because if they're down in value, it just means long term you're going to make more profits. But again, I don't want to have those overweighted. For example, we have over €500 now invested in the iShares ETF, and we have €256 invested in High Tide. So I'm going to just leave those 2 stocks slash ETFs for a few weeks, and because we have 5 others that we can take advantage of that I haven't invested in a while, that's why I'm leaving these 2 for now. So as stated earlier, Chevron is the first company we're investing in this week. Now this is a prime example of why I've switched to the 3-month chart to dollar cost average. For example, at the moment we have €758 in this energy sector pie, up 6.77% overall. Now the iShares Clean Energy ETF, which we discussed earlier, that we're not investing in, is currently down 8.8%. ExxonMobil is up 78.92%, and the one energy stock we're investing in is Chevron. It's currently up 46.4%. Now overall, this had highs of about 60% in the green. So if we were to wait for this stock to go back into the red, you could be waiting a long, long time, and that's if it even did drop 46%. So that's why I'm starting to look at the 3-month charts at the moment. Now as it stands with Chevron, our average cost is about $72 at the moment, and it's currently trading at just under the $108 mark, so I'm very happy with that. And it's about up just under the 50% mark as we discussed a few minutes ago or a few seconds ago. Now as it stands on the 3-month chart, it's currently down 2.97%. So again, although it's just under the 3% mark, I will be investing here today, and that's mainly because I haven't actually invested further in this stock, probably since investing in first day. So we're going to put 1/5 of the €125 or €25 in here today. So we've invested €27.82. That €2.82 additional was from dividend payments. So again, it's not a lot, but again, over time it will compound. So once the New York Stock Exchange opens, that $27.82 will invest. Now again, psychologically, it might look worse in terms of cutting down my overall percentage. Now at the moment, Chevron is up about 46 or 48%. Now by adding this €25 in, it's going to probably drag it down to about 30% in the green, although in the 3-month chart we're actually doing better. So you should really kind of keep that in mind and focus on your overall account value, not just your individual stocks, because that will pay dividends in the long term. So again, focus on the top left hand side of your screen and only focus on your main overall P&L. The second stock we're dollar cost averaging into today is actually in one of my best performing pies in the form of financials. We have €1,200 here at the moment and are up just under 39% overall. Now if you looked at this at a glance, all 5 here are doing very well, especially the bottom 3 with JP Morgan up 62%, Bank of America up over 70%, and Goldman Sachs 87.6%. But again, the company we're investing in today, by looking at the 3-month charts, is MasterCard, which is currently up 11.73% overall. So with MasterCard, we have €308 invested at the moment, and again, my overall performance on this stock is up 11.76%. But again, you need to look at the shorter term charts, especially as a long-term investor as well, if you want to dollar cost averaging consistently. And MasterCard again is a good example here. Currently on the 3-month chart, it's down 4.9%. So just like Chevron, we're going to be investing €25 here today as well. And I think from looking earlier, we have about €2 or €3 in free funds from dividends in that pie as well. So we'll be investing about €27 to €28 today in MasterCard. It will be €27.32 we're investing today in MasterCard. Now this isn't rocket science at all. In fact, anyone at all can do it. That's why I love this style of investing. It just takes patience and consistency in long-term trading. Our next 2 stocks are both in the same consumer discretionary pie, which we have €1,715 invested and up just under 0.38%, so not a whole lot up here at the moment for the amount we have invested. Now the 2 here that stand out are Tesla down 8.86% of my overall stock, and Nike is down 1.69%, with McDonald's the only one at the moment in the green, up 11.6%. Now that just shows as well the importance of diversification across different sectors, because as I always say, different sectors react differently to different market conditions. Now while I'm here as well, it just kind of shows the importance of always kind of balancing out your sectors, because I was actually surprised even there that I have €1,700 invested in consumer discretionary, which is probably about 15 to 20% of my overall capital, which seems a bit much for just one sector or 3 companies. So again, that's worth looking into as well, and that's the importance of looking at 3-month charts, because it will definitely give you an overall better outlook on your overall portfolio, because it will make it out more even by adding in different funds into different pies. Now again, €1,715 seems a lot here at the moment in comparison to the overall account value, but over time we might make a video in the next few days of how I'm going to balance out my portfolios going forward. So just very briefly on these 2 stocks. Firstly, Tesla, we have €661 invested in this stock. On the 3-month chart is down 12.8%, and my overall value of this portfolio stock is down 8.83%. So you can see there's about a 4% difference on the 3-month chart in comparison to my overall value. So that's kind of a great opportunity to dollar cost average there as well. And the other stock in this pie is Nike. We currently have about €320 invested, and we're down about 1.65% overall. Now that's not a whole lot, and usually I would disregard this stock to invest further in. However, if you look at the 3-month chart, it's down over 6.5%. So again, just like Tesla, there's great room and scope here to dollar cost average. So that's going to be a 50-50 split here, so €50 overall in this pie, 25 into Nike and 25 into Tesla, which then leaves €25 left, which we'll be investing in the communication services pie. As it stands, we have €608 invested here and up just over 29% or €153. Now we only have 2 holdings in the communication services pie, Walt Disney and Facebook. Walt Disney is up 30.37% and Facebook is up 27.89%, which looks great overall. However, again, this is one of the main reasons why I'm investing on the 3-month charts, dollar cost averaging, instead of overall, because it's going to be a long time before either of these stocks go back into the red, hopefully. So Walt Disney, as we'll see now on the 3-month chart, is currently in the red. At this moment in time, we just have just under €350 invested in Walt Disney and up 30.4%, which looks good overall. In fact, we were up about 40 to 45% only a few weeks back. So it has been dropping, and we can even see here on the 3-month chart that it's down just under 10% in 3 months. So overall on the 3-month chart, this poses a great opportunity, just like the other 4 stocks as well, to dollar cost average here today. So in summary, we can see here that we invested a further €125 of my capital and about €5 or €6 in dividends as well. So overall €130 today into Chevron, MasterCard, Nike, Tesla and Walt Disney. That we invested fairly into all 5 of these, so about €25 into each today. So I'm very happy in terms of having to be able to dollar cost average in the 3-month charts, because it gives me a better overall scope to invest in some stocks. I haven't done so in a long time. For example, it's been mainly High Tide and iShares Clean Energy ETF that I've been investing in lately, so I'm happy to get in other stocks as well to keep them kind of growing over time. So I'm very happy with the outcome today. So that brings the end to today's video. I hope you took some benefit or enjoyment out of it, and I will see you all in tomorrow's video.